everyone. We got to go over Bitcoin. As you can see, Bitcoin has rallied to 61.5K. Now, not only have we rallied here to 61.5K, we're up 2.5% in the last 24 hours, 3.5% in the last 7 days. And if you look here, Bitcoin is forming a very particular pattern. So we're going to talk about this. Remember, I'm not a financial advisor. None of this is financial advice, but let's get straight into it. So talking about Bitcoin here, you can see we are forming what we call a almost like a bear flag or bull flag, but it's not necessarily like that. This is a falling wedge. But I always talk about this. The context to these patterns matters a lot. And what I mean by the context, what did we enter this falling wedge into? We entered this falling wedge from a downtrend, right? From a bear flag. We entered it from a downtrend. So context matters, right? Falling wedges are bullish patterns, but the context matters. We entered it from a downtrend. Typically, we enter from an uptrend. We come in an uptrend, we go in our falling wedge, and it creates a falling wedge / bull flag, and then it continues upwards because it entered into it from an uptrend. So it continues upwards, right? Context matters. When you look at it here, we entered it from a downtrend. Usually when this happens, we end up getting bull traps. All right, I want you guys to remember that we usually end up getting bull traps when this happens. Now, let's talk about how this bull trap could happen. Now, this is the falling wedge. I do believe we're going to end up pushing up to the top of the falling wedge here. This is around 63K. There's a possibility that we could break it and push up to 68K and then have somewhat of a pullback, right? Have a rejection here and have a bull trap, break out of the falling wedge here and then having a bull trap here at the Fibonacci resistance of 68K. So there is a possibility of that happening inside of Bitcoin right now. So yeah, we are forming this falling wedge, but we entered it from a downtrend. So you have to be extremely careful. Now we are above the 50-day moving average on the 4-hour chart. So keep that in mind. If we pull back and we touch this 50-day moving average, we can use it as support. If we go below it, then we're back into bearish mode, right? And I'm still not bullish for the bull market, but this is a temporary relief rally. That's what we could quite possibly see is a temporary relief rally, right? It's only a possibility. We also have the Fed meeting that's going to be on the 8th, and this is the new Fed that is under Trump's thumb, which means that he's going to do what Trump wants, which is usually going to be an interest rate cut. I don't know if they're going to do it now, but they're probably going to be looking into doing it because that's exactly what Trump wants. And this new Fed is controlled by Trump pretty much. Well, that's what everyone is assuming, right? Now, we also have this right here, the percent hour trend exhaustion on the 4-hour chart. You can see the long-term trend is not really following the short-term trend. Short-term trend has far exceeded the long-term trend. The long-term trend is also starting to get up here towards this overbought range. So as it starts to get here, we start to be at more risk of a pullback. It just so happens to be right as we're reaching the top of our falling wedge, which could mean that we could have a rejection here. So you still got to pay attention to this. We could either get bull trapped at the top of the falling wedge and then continue downwards, or we can get bull trapped at 68K, right? We can break out and then get bull trapped at 68K and then have that dump, right? So that's a possibility. This is the 4-hour chart, by the way. Now, this is the MACD on the 4-hour chart. Remember how I was talking about how we had bullish divergence? Bullish divergence is categorized as higher lows on the MACD while simultaneously having lower lows on the chart. And when you actually look at this, this is the higher lows on the MACD while simultaneously we were creating our lower lows on our charts. And then we had the breakout. That's what bullish divergence is. All right. So when you look at that and you look at it from a macro perspective, what are we doing right now on a macro perspective? We're doing bullish divergence, right? We're having higher lows on our MACD while simultaneously having lower lows on our charts. And this is exactly what I have been talking about. Why am I talking about this now? Because as we get another relief rally, what do you think is going to happen after the relief rally? Well, we're still going through bullish divergence. So then we're going to have another pullback and another lower low on the charts and another higher low on the MACD. So even if we have the breakout pushing us up to 68K, then we could still break down and continue to create lower lows from there. So this is probably going to be a bull trap. And remember the context of our falling wedge. We entered our falling wedge from a downtrend. That's the context. So we're probably going to end up continuing that downtrend after the relief rally. You also have to look at other aspects. We have the 50-day moving average. It just so happens that the 50-day moving average on the daily chart is right here by the Fibonacci resistance of what? 68K. And we could end up getting rejected there, just kind of like how we got rejected there before, right? And then on top of that, we also see our 200-day moving average is pulling back as well. So even if it finds a way to break past it, we still have the 200-day to try to break past, which we could end up having a pullback from there as well. So the bear market, in my personal opinion, isn't over yet. And then when you look at the %R trend exhaustion on the daily chart, you can actually see that it's trying to recover from this oversold region. But typically when this happens, we're probably going to end up seeing another pullback, and we're going to see this squeezing here into this range on the %R trend exhaustion right here in the oversold range, and then it can probably have a breakout from there. But we'll see how much it can recover from where it's at now. All right, so also we then have our weekly chart. So looking at our weekly chart, what do we have? We still have bullish divergence. We're having higher lows on the MACD while simultaneously creating lower lows on our charts. And this is a big thing because we are literally still going through the bullish divergence. So we still have to create the lower lows on our charts. So we're still going to see that pullback happening for Bitcoin. So you have to keep in mind that we could probably continue down towards 50K or lower. Now, this is like relief rally territory. If you look at the %R trend exhaustion on the weekly chart, you can see it's hitting that oversold region, but it's also starting to curve upwards here. You can see that it wants to recover. So a possible relief rally could be happening now, and then a continuation downwards. All right. And then we have the monthly chart. Bunch of selling pressure on the monthly chart, but by no means is it over yet. You can look at the monthly chart here on the MACD. You can see that's a lot of selling pressure. So we could probably start seeing a little bit of buying pressure coming in, but that selling pressure is very, very, very strong. If you look at the %R trend exhaustion on the monthly chart as well, it also looks like the relief rally scenario could happen where we turn up a little bit here and then continue downwards towards the end of the year, and then have that actual bull market starting by the end of the year going into next year. So that's still the possibility. And if you look at the monthly chart here, you can see we're bouncing off the 50-day moving average on the monthly chart. Not only are we bouncing off the 50-day moving average on the monthly, we should be coming up here to that 200-day moving average possibly on the monthly. So again, that could be the relief rally that we get rejected at and then continue to go down. And by the time it reaches that, I reckon that the price of Bitcoin might be more so around 68K and then a continuation downwards. So that's kind of how it's looking like right now for the technicals on Bitcoin. And look, guys, if you guys want this information immediately, you want this information access to it 24/7, go ahead and check out the Crypto and Options Edge group, and link will be in the description for that. It's on wapwap.com. Crypto and Options Edge, link in the description. Shout out to the members that we have right now. 3 so far. We're growing, guys. It's $98 a month. I know it might be a little expensive, but it's worth it. If you check it out, we have the War Room. I've been talking with them all day, and we've been discussing different technical analysis scenarios. I put in all these different scenarios that we could have, and I do the technical analysis there 24/7. Whereas with these videos, I just do them when I can do them, right? I just do them when I have time. But if you look, we have a whole bunch of conversations here. We have a whole trading and analysis discussion forum right here. And then we have the trading mastery course, for which there's going to be 4 chapters, 8 lessons per chapter. And then we are going to have 4 chapters here, and then we have the crypto trading fundamentals, the options, beginners fundamentals, and then we have the technical analysis, and then we also have the risk management section of it. As you can see, we're taking a little while to load here because my internet's being slow. But yeah, go ahead and check that out, link in the description. But we have more to discuss today, right? We have more to discuss today. This person here, Artie, he actually made a good point on Twitter. It says Bitcoin, once we reached July during the 2018 and 2022 bear cycles, Bitcoin rallied roughly 43% and 33% over the following few months. Now, this is the chart that he's showing. And this area right here that I'm hovering over, that's what he's talking about right there, right? And he's actually kind of right. He's kind of right. And then he also says, if we apply the same drawdown compression to estimate this cycle's mid-cycle relief rally, we'd be looking at something closer to 24%. Assuming 57K marked the mid-cycle low, that would place the projected rally somewhere around the 72K region. On both previous occasions, Bitcoin did eventually rotate back toward the lows before setting the final bear market bottom later in the year. And this is what I keep talking about: a temporary relief rally followed by another crash, creating lower lows, because we still have bullish divergence. We still have to create lower lows on our charts and higher lows on our MACD. So we still have the pullback, but this is just a relief rally. Why are we having the relief rally? If you look at the daily chart, you can see that we are having a little bit more buying pressure coming in, but bears are still in control because we are still inside the bullish divergence, but we're still diverting from the bears. That's pretty much all bullish divergence means. We're diverting from the bearish pressure, right? We're diverting, we're pushing it away from us, but we're still trying to become bullish at the same time. So we're still bearish, but at the same time, we're becoming bullish. We're diverting away from the bearish movement and we're becoming bullish, right? But it's only a matter of time. We just have to create those lower lows on the MACD and the higher lows, are the higher lows on the MACD and the lower lows on the chart to actually go through with it, right? So that's pretty much how that is working, right? So yeah, and I'm also going to have, again, the trading mastery course. We're going to be going over all technical analysis stuff there. So you guys can just go ahead and join the trading mastery course, and then we can get that started. We can get you guys taught on the technical analysis. I haven't put that out there yet, but look, I'm doing one lesson per day on here. So you'll be seeing a new lesson every day. Again, 8 lessons per chapter. We have section 1, which is going to be crypto trading fundamentals. We're at lesson 3, almost at 8. And then we have the options trading basics at section 2. And then we have the technical analysis and risk management. There's going to be 8 lessons per one. And actually the technical analysis and the risk management is going to be the most important ones, I'm telling you. All right, so that's what we're going to be doing there. But yeah, I think this guy is 100% right. I think we're going to be doing something like that. And actually, if you come back and you look at what we did back in 2022, you can kind of see that something very, very, very similar happened. And what happened here inside 2022, we broke all the way down to about 33K, had a huge rally, pushing up to the 200-day moving average, like I was mentioning before, around 48K. That was March. And then if you look over here where we're kind of right now, we also had a little bit of a rally too, from 28K all the way up to 31, and then it continued downwards. So that's kind of what happened. And then in 2022, and then you've seen even more moving inside of June, right? So from there, you've seen it go from 17K all the way up to 24K. And if you do the math here and you look at that, you can see what this guy is talking about. Artie, that was a 40% pump. Right? It was a 40% pump, right? And that was in July 1st, just like how we're doing now. It had a 40% pump all the way up to 25K. And then it proceeded to go down to 15K from 25K. And what percentage of a drop is that from there? Well, from 25K all the way down here to 50K, that was a 38% drop. So he has a point, and we are still bearish, but this is a temporary relief rally. So I would say, let's see how it plays out. But this is a bull trap. It's a bull trap, right? They're trapping the bulls. This is a liquidity trap. It's actually funny because lesson 3 inside of the crypto options edge group, lesson 3 inside of the trading mastery course, I actually was talking about understanding crypto market mechanics. And within this lesson, I was talking about open interest, right? Positive and negative. I was talking about how liquidation traps are happening, right? I was talking about all of that, and you guys can get that directly. Welcome just by coming here through this. There's a lot to learn inside of this, and I would really recommend you guys to check it out, right? There's a lot of gems and a lot of game that you guys can learn from this. So go ahead and check it out. Link in the description. But yeah, it'll also be helping. You'll also be helping support the channel because, like I said, I make $1 per video, right? $1 to $2 per video because I don't get that many views, right? So go ahead and check that out, support the channel, and also learn some while inside of the process. All right. And then he goes on to say, on both previous occasions, Bitcoin did eventually rotate back towards the lows. So like I said, It could continue down. If this cycle continues to follow the same roadmap, then the next few months will be about setting the final macro low high before, or the macro lower high before the last leg of the bear market begins. So I wholeheartedly agree with that, right? And it could last for 3 months, like he said. Look, July, August, September. I've been preaching October for the end of the bull market, because October 5th marks 3 years, exactly 365 days. October 5th marks that. Why? Because when we actually, broke down and got to our all-time high was created October 6th, right? It was created October 6th. But if you look at the weekly candle and you look at the close of the weekly candle right there, you're actually going to end up seeing that weekly candle closed on October 5th, right? It closed right here, and then it opened right here, October 6th. All right, it wasn't the 5th, but it was the 6th. But still, 365 days, a full year of a bear market, and we've almost played that out. It usually takes a full year. It took a full year in 2022. It took a full year inside of 2018. And then all the way back here inside of 2014, it was different. It was 413 days because there's less liquidity and it was a more immature market. We have a very mature market now. So again, 2018, 1 year, 365 days. 2022, 1 year, 365 days. So why not 2026, 1 year, 365 days, right? So that is how I'm looking at it. And it doesn't have to do it exactly the same way. It could be a little bit more than that, just like how 2014 was, or it could be a little bit less, right? Because it's a more mature market. So either way, I'm still bearish for this market right now, but a temporary relief rally is here. Now, this guy, Ted, he says 80K Bitcoin is the most popular bet for this month. The most popular bet for the end of Q3 is a Bitcoin price range of 50 to 60K. So still, that means hitting going up to 75K or something like that, and then having a massive pullback back down to the 50K region and maybe even 40. He says it seems like big money is expecting a Bitcoin relief rally this month and then a new bottom. So yeah, like I said, this is a bull trap. But yeah, it could happen. It could happen. Now, he said this guy says we need to reject 62.2K here if we are going to tap 54.5K through 48.8K. And then he said we can reclaim 62K. So this guy is of the notion that we're just completely bearish and we're not going to have this relief rally at all. I'm 50-50 on this one. I think I'm more 30-70 on this one. But I think the relief rally is more likely because we are inside of a falling wedge. Falling wedges are bullish patterns, but we did enter it from a downtrend. So the context of that kind of makes me lean more bearish than anything. All right. So that's what I got for that. And again, guys, check out the Crypto and Options Edge group. Link in the description is not just a course. There's also this war room chat where we are literally discussing all day about different scenarios here and just doing all of this that I've been telling you guys. I've been updated them here. I've been updated them on that. And I'm just now getting it to you guys now because I haven't had time. But yeah, you probably could have gotten it a little bit earlier. But anyways, it is what it is. Go ahead and check that out though, guys. And check out Avantisfy, link in the description for that, for doing the best DeFi perps trading on the Base platform. So yeah, this is all I got for you guys today. Hit the like button and subscribe. Remember, I'm not a financial advisor. None of this is financial advice. And as always, I'll be back with another video.